Computer. All right, guys, happy Wednesday. Thank you so much for joining us. Hopefully you guys all know that this is our webinar about how to buy another home, because 63% of people have a mortgage rate, either 4% or less. And so all of us here, we're going to introduce ourselves in just a second. I think that's just a common question that's coming up right now is like, okay, I've got this great asset and the interest rate's really low, but I kind of want to buy another. How the heck do we qualify for a down payment and income? And something that I'm super proud of is that everybody here, licensed loan officers, and we've all actually utilized this strategy. And I think that that's important because there's a lot of mortgage bankers here in the DFW area, but not all of them know how to be a landlord, how to strategize for that. I think Brittany was probably the most recent one that went through the whole, your first renting.
Yeah, that was a little scary. We had to relocate in 2019 to Georgia for a year. And it was like, I'm in the industry and I felt nervous. I didn't know what to do. Do I list my home to sell or should I rent it out and make some money off of it? So originally I went to Google, right? And I went to realtor.com and I was like, how much can I rent my home for? And, there was a lot of just different information that was out there. And I think the most important thing was I tried to do it on my own. I really wanted to find the tenant and kind of cut out the middleman and see if I can just make this happen on my own. But I learned the hard way and I realized that a real estate agent is needed during this transaction. And a lot of people might not know that realtors can help you find tenants for your home if you're trying to be a landlord and rent it out. They're not just there to help you find a home and buy a home. Utilize them because they know the market. They know exactly how much your home should rent for, because when I did my calculations, I didn't take into consideration my HOA. I was actually losing money in my math, and it was just much easier, especially when I realized I had to figure out a lease agreement and how to type all of that up. So it was amazing. I did have to do 2 short-term leases, which was, it wasn't as scary as everyone thinks it might be. And I kept my rate. I got to keep my home. I now have a bunch of equity. I'm in.
And remember, in 2019, it was a different market then.
I couldn't find. It took like 3 months.
Yeah, because initially you guys were going to list, and I think you tried to list, and then you were still in a new construction area.
Oh yeah.
And it was like, okay, let's rent. And then imagine if you would have sold that house.
Oh my gosh, no! I'd be so upset. I'd be so upset.
So upset, right?
All the equity, and then I refinanced, and I have like a 2.5% rate, and it's the same for what we're all going to talk about today. I don't want to give that up, but I'm ready to find my next home. So how do we get there? What do we do?
Well, I want to introduce, I'm going to share my screen. Hopefully you guys, so in case you're wondering, we've got our computer here and I know the camera's up there, but I want to share the screen so you can see our PowerPoint. Let me know if you guys can see it. Share. Okay. Can you guys see that okay? Hopefully. All right. So let's just go around the room and introduce ourselves. My name is Denise Donahue. I'm the mortgage nerd.
I'm Amy Rohrback. I'm a loan officer.
I'm Brittany Book. I'm a loan officer.
And I'm Kara Westbrook. I'm a loan officer as well.
And are you guys all landlords? Have been a landlord?
Yes.
Would you give it a thumbs up or a thumbs down?
2 thumbs up.
2 thumbs up? Okay.
Sure.
I just think that's interesting because I feel like in today's world, you only hear, I guess it's common on the news. It's like you only hear about the bad stuff and like, don't do that. You're going to have a tenant destroy your house. So what's been your recent experience with your tenants?
Oh man, we've had so many tenants. We do use a realtor every single time that we get a tenant. They pull credit, they look at all their financials. So we know that they are vetted and they're going to be a good tenant. We look at all the history. So we've never had any issues. Maybe we had to get a new hot water heater, but that's just a part of having a home. So it's always been great. We've never had any issues.
Knock on wood. Okay, now all of us knock on wood. All right, so we're going to go over really 4 main topics with you guys. The first thing that we're going to talk about is something that Brittany dove into just a little bit, but really, I'm sorry, the first topic I'm going to talk about is evaluating your current home situation. And I truly think that that's the very first step is, yes, you may have a home and it may have a low interest rate, but what does your current rental amount look like? Can it cover the mortgage payment, things like that? So there are 3 key things that you're going to want to analyze when you're evaluating your current home is number 1, what is the current interest rate on your mortgage? If it's not in a competitive interest rate, that's something that you would want to reach out to us about. The second thing is how much equity do you have in your home? I know the last few years, the market's been fast and furious and it has changed a little bit, but I went to a conference, it was a Tom Ferry conference, and they said that more people have money in their home than they do in the stock market or in their 401k. And it's not like you get any kind of statement in the mail that's like, this is how much equity you have, which is just, it's kind of crazy when you think about that. Like, we get bank statements for our checking and savings accounts and 401k, but a lot of people don't have any idea how much equity you have. So if that's a question that you guys have, well, how do I find out how much equity? Just reach out to the person who invited you to this. We can help you with answering that, because that's going to help determine on your next purchase, which we'll get into, is do you have funds in your saving account to use for that down payment, or do we want to tap into some of that equity? But we need to know how much equity you have. And then the third thing is, what is your total monthly payment? And some people just pay a principal and interest payment, but you really should factor in what your taxes, insurance, and sneak that Brittany's going to tell you guys about is even that HOA due. So even if you pay like your HOA at the end of the year or your taxes and insurance on your own, take those figures, divide it by the month, divide it monthly, and figure out what your true total monthly expense is for that house. And that's what we're going to want to look at to see, can the rent cover that cost? Another thing just to mention is sometimes we get the questions, well, what if the garage breaks or the garbage disposal? And that's all part of owning the home. There's home warranties that you can have on a house. Insurance, of course, would cover if a hailstorm came in. But those are things that you can write off on your taxes, which is probably even more attractive than having a primary residence, is you can write off everything. It reminds me of that thing on TikTok. You know, that guy, what's he's on like Schitt's Creek where he's like, it's a write-off.
Yes.
Yeah.
Well, it's when they write it off.
Well, what is a write-off? Yeah. But literally, like if you paint the house or you get new carpet, like all that stuff you can write off. So yes, you're tangibly writing the check, but you're also going to be able to get it as a write-off. So step 1, evaluate your current home situation. And again, if you have any questions on that, just reach out to the person here who invited you. And then you can move to really step 2, which is what Brittany went into a little bit, but how did you help decide on like what you could rent your home for? If you were doing it on your own, what tool would you use, even though an agent's going to be better? And then what was the experience with the agent? What did they help you with?
Yeah, so at first I mentioned I went to realtor.com and I went to Zillow, and I just wanted to see what homes were renting for in the area. And I think the hardest part was me trying to take the emotions out of it, because it's my home and I was like, oh, I can list it for so much more, because I felt like it was a little more superior to the other homes that I'm seeing in the area. But in reality, even though I'm in this industry and I was trying to be, you know, my first landlord rental experience, I went through 2 agents to figure out which one was the best fit for us. And that's totally okay. It is okay to find someone, and if they're not the best fit, find someone else.
Was there anything like in particular? I know you're not going to say the realtor's name, but was there?
No, so we relocating to Georgia, and we had a relocation company. So they provide an agent for you, which is nice, but turns out, you know, you have an open house, and I'd had my Ring camera on, and they would show up a minute before the open house. There was no signs outside or no balloons. And I was trying to figure out why we weren't getting traction, even though it was new construction, a home was being built right across the street. So I knew that. And we couldn't even come close to what we were trying to sell it for, what we bought it for. I mean, it was break even, maybe even losing money. So we looked at a strategy, and I got with a new realtor that I was, you know, just kind of familiar with a little bit. She said, hey, what does this look like? And she wrote down on a piece of paper, this is how much your mortgage is. This is how much we could rent it out for. This is what you want to take into consideration if there is something that you have to repair. I know you're moving out of state, so who's going to manage this for you?
Right.
And we had to really look at it. Are you going to hire a property manager? And it was just so nice to hear that and have the emotion out of it, because a real estate agent's gonna tell you what people want in
Yeah.
the area that you're located in, and who's really looking for what homes and how long the leases are gonna be. And then they help me fill out the lease agreement.
Yeah, that's
And
scary
the
in itself.
background
The
check.
lease agreement, like if we don't, yeah,
And who's moving into the home, you know, you
Yeah.
just wanna make sure they a reliable person. How many kids or dogs or pets are gonna do pets? Is there smoking or non-smoking? I mean, there's just a lot of things to take into consideration, and I feel like we had a pro and con list for a while, like, this is my non-negotiables, and the real estate agent brought us back to
reality.
reality and was like, you can't just say all this stuff, you're not gonna find any tenants, so.
But I think that's a good point is when I first rented my house out, this is very long ago, it'll date me, but I actually didn't know that real estate agents help with renting. Did y'all know that?
Yeah.
Okay, well, this was a long
Been
time.
in the
This was before I was in the industry, but I was like, oh, I don't want to bother a realtor. They just help people buy and sell. They're not going to help with the renting, but they do help, and they help with the same type of contract writing, and they'll put your house on the MLS for rent. And so my advice to anybody that's on this call that owns a home, reach out to the agent that you may have worked with to help buy the house. If they're not still talking to you since you bought the house, and reach out to one of us, we can connect you to the best agents in DFW, but they absolutely will help navigate a strategy. It sounds like that's what
Yes.
you landed with, is like someone gave you a game plan.
Yes, and
Yeah.
being a first time landlord, like it is scary, even for me being in the, it is well worth it, but just to get through those baby steps and them explain it to you how everything works made it so much easier. I would hands down every single time hire a real estate agent, because it was
Worth it.
totally worth it.
So let's get to the nitty gritty part. This is probably what most of you guys are wondering, is how the heck do we qualify from a debt to income standpoint? Like, is this mortgage going to count against me? How much money do I have to put down? And so who better than the tax return queen,
Yeah.
Amy, like the best, I would say you're the best. I think mortgages are like Rubik's cubes.
Mhm.
Do you know how to put a Rubik's cube together?
No.
I used to have one in my drawer.
Absolutely not.
She is the queen of putting this stuff together. So will you help explain from a qualifying standpoint, does the mortgage hurt them and limit how much they can buy? And then what the heck about down payment we'll get into next?
So I will say too, a question that I often get with this is, the home that you own right now, you're just converting that home into the rental property. So your mortgage is still going to stay the same. I think a lot of people, they hear that that's going to be their rental and they think, well,
Something's gonna
wait,
change.
yeah,
Yeah.
but it's not. So that's the beauty of it, is that if you have that low 2-3%, 4% interest rate, you're still keeping that same payment. So you know what that payment is.
Mhm.
Then when you get with a realtor to get an idea of, okay, what am I looking at as far as how much can I rent this out for? So you actually get to use, as far as qualifying, yes, we do have to count your current mortgage plus the new mortgage into your quote debts. However, to offset that debt, you get to use 75% of that lease agreement. So for example, yes, if your lease is $2,500 is what the going rate is, you get to use 75% of that, which is $1,875. So let's just say your mortgage is $2,000 a month, although really you're making $2,500 a month. So you're bringing in $500 a month there. As far as the qualifying side, we only get to use the $1,875, but it's a lot better than hitting you for that full mortgage payment, maybe, or whatever it may be there. But, and it could even be less than that, to where it completely wipes out that current mortgage payment just by getting a lease agreement. And right now, those are pretty easy to do, especially with how leases are going right now and how quickly they're going off the
Mhm.
market.
Why is it that you can only use 75%? Like if the lease agreement is $2,500 a month, why wouldn't a mortgage underwriter use $2,500 a month?
Well, because there are expenses that go into a home, owning a
Mhm.
home, such as Kara said, her hot water heater broke.
Yeah.
Things like that. So it's not like you're absolutely profiting every single bit of that money. And you do have to have a little bit of a cushion as you start building that up for repairs and things like that. That would just happen with any home, not necessarily just a rental property. So because of that, they're not able to give you the full income amount because you've got to take into consideration that. But also, when you're just now going to be renting this property out, you haven't yet claimed it on your taxes. So when I'm receiving that money each month, it's not yet taxed by the IRS. So it also comes with this formula that's given by the mortgage guidelines.
So if you just brought up another question, which by the way, our next webinar next month is going to be all things about taxes, self-employed, writing things off, because when you do become a landlord, you're going to be able to write some things off. But if you want to build out future real estate portfolio, whatnot, it's really important that your lender is communicating with the CPA. And that's what Amy does. Amazing. I feel like you could be a part-time. So you're a Rubik's.
No.
She is a Rubik's Cube professional and also a CPA
No,
specialist.
no.
So
I'm in touch with a good
Yeah.
CPA.
but I think people don't realize that, CPAs, they want to write as much income off as possible, but mortgage underwriters, and this isn't just specific to our company, this is how Fannie and Freddie write the guidelines, by the way. So it doesn't matter if you're going to a big bank, credit union or whatnot. The guidelines state that if you are converting a primary home into a rental, you don't actually have to have a tax return so that we can see what income you're reporting. We can use this lease agreement. But what about, because these were some questions that we had, what about if you own your current home and you want to buy an investment property? Like this, we're talking about converting your current one into a rental, but how does the debt to income work if you want to buy a rental property and stay in the one you have now? Is there any income that can be used to offset this, or is it just full blown?
No, it's the same as far as with getting a lease agreement. Now, an appraiser is going to run what's called comp schedules, which is basically they're going to go out and they're going to look at, okay, for other investment properties that are strictly investment, what are they renting for, to make sure that you're not just throwing out this number because you're emotionally attached or something like that. It has to be within realm of, yes, within this neighborhood, this is what this is renting out for, to help offset that additional mortgage, if just buying straight into an investment and not converting your home.
Yeah. And I think it's important to mention that in the mortgage world, we actually categorize houses into 3 different sections. They're primary, second home, and investment property. And sometimes people say, I want to buy a second home. And you just mean an additional home, but just know when you're speaking to a lender, it's like our little, antennas go off. Is that what they?
Radar?
Yeah, a little radar. Do y'all, I know y'all do that. You're like, wait a minute, is it a second home or investment home? So we can get into the specifics on what the difference is, but investment is just like you plan to just put a tenant in there and it's just a full-time rental. A second home might be like a beach home, or maybe you own a house out in College Station. And when you go to the Texas A&M football games, you stay at your house every so often. That's what, yes, come on now.
Yeah.
Okay. Aggies, no, okay. Oh my gosh. If there are Longhorns, you need to sign up. No, just kidding. But hopefully that answered your questions about debt to income. You're not going to get hit twice for that. And I think that's a big concern that people have, is how the heck am I going to buy my next home? Maybe your next house, you want it to be bigger, or you want it to have a pool, or maybe it's smaller. It doesn't matter, but we can help you offset that current mortgage payment. And there's no shortage of people wanting rental homes right now. So don't be afraid of that. But, the next question that we almost always get, and Kara, I would love for you to go into more detail about this, but from a down payment standpoint, can you buy another home, convert your current one into, so let's talk about this scenario first.
Okay.
You're going to convert this one into a primary, into an investment property. You want to buy another primary.
Right.
Can you buy that sucker with little money down?
Absolutely.
Spill the tea, sister.
Okay. Oh yeah, spill the tea. I love it. Okay. Yes. The minimum down payment, guys, it's really only 5%. Like 5% down.
Did y'all hear that? Say it louder for the people in the back.
5%. For a conventional primary home to buy that. And you're probably wondering too, okay, well, I have equity in my current home. I have a low rate, the one that I'm going to be converting into a rental. How do I tap into that equity to be able to utilize that to buy that rental, or to buy my new primary? Sorry. Yes, you can do a home equity line of credit. I personally just did one back in October. Since your equity is probably up, I think it's a great idea just to have it on the sidelines, and that's probably for another webinar. We can get more in detail about the home equities. But it allows you to tap into your equity without touching your first mortgage. You can take that equity and apply it and buy 5% down your new property, your new primary home. And then, on a side investment note of it, you will have that line of credit available to you if you need it in the future. So I think that is usually that's what we did. And I don't know, that's what we did.
So
I don't really know.
what if,
I think it's
Yeah.
fantastic.
yeah, what if, and I've got my really fancy drawing, I'm gonna show you guys, I'm gonna bring it closer to the camera, but let's say it's in reverse. I'm here all day, I'm a really good
Not
drawer,
reverse,
yeah.
not
Yeah.
reverse, but that's okay.
Let's just say you were gonna keep your current home and that was gonna remain your primary, but now you wanna buy another investment property. You've been on a million webinars and okay, I can really build wealth with real estate. I'm gonna go buy a rental property. What's the down payment situation look like if you're buying an investment property versus a primary?
Great question. This is exactly what I just did. I just bought an investment property here in Salina. I took out the home equity line of credit. The minimum down payment for an investment is 20%. You will have to do 20%. But with equity values rising or property values rising, you probably have that in your home to buy that investment property. Now, I do run numbers. I did run the numbers to make sure that 75% that you can utilize when Amy was talking about earlier. I make sure that I am able to rent that property out for at least 125% of what my mortgage payment will be. So I know I can utilize the full amount. And I do walk my clients through that, and the agents will as well. So it's important to utilize an agent, first of all, what Brittany was talking about, because they're gonna tell you what you could probably rent it in that area. And then I can come in behind, or we can come in behind and help calculate, okay, what would you need to rent it out for to offset it completely? So we're always in your corner. So that's what we did, 20% down for an investment property. And we're clearing a couple $100 a month, and it's completely offsetting that payment. It's
Do
amazing.
you guys care more about? I think people are like, is there a certain amount that you have to cash flow for it to make sense? So it's like, do you care more about the cash flow, or do you care more about in 10 years, your house is gonna be worth so much more? So would you do a deal if you just cashed?
Yes.
Like, okay, yes, would you?
Oh, yeah, that's what my first lease was 6 months. We broke even.
Broke
But it
even,
was
so it
totally
just covered
fine.
the expenses, would you?
Second lease,
Absolutely.
Okay, why? I know the answer, but why would you do that? If you're like, I'm buying this rental property to make money every month, why in the world would you just agree to break even if that's what it meant to keep the rental? Why would you do that?
Well, I think I have 2 children. As far as I think about like their future and where are they gonna be in 10 or 15 years when it comes time for them to buy a home? And what if they're in a situation where, rent's just ridiculous, and knowing that they could make that mortgage payment where it is. And like I said, once again, I'm just breaking even, but that's also because I've accrued so much equity over the time period. My mortgage has remained the same, remained low. So even though housing prices continue to rise and rent prices continue to rise, it's able to keep that manageable. But then also, if I ever got into a situation where I'm not able to work or something like that, and you just never know, you've always got that equity to if I needed to sell it quick because hey, I've got to get this cash out. It's still something that the equity, the appreciation on the home is going to continue. Rather it be, I know right now the market was crazy and then it slowed down and everybody's like, am I upside down? We're still in an appreciating market. It's not depreciating. So even if
still up
it's
10%, like everyone's like, oh my God, it's not 18. It's like, it's still 10%,
I mean, even if it's 2%,
Yeah.
you're still appreciating while the mortgage is being paid down.
Yeah.
And kind of like what you said earlier, Denise, you have more money or equity in your home than you do in your investment portfolio.
Yeah.
How long have people been contributing to their 401ks?
Oh, yeah.
Maxing them out fully.
Mhm.
I've been doing I'm 40 years old. And I've
Wow.
been doing it since I started working, and I have more equity in my homes than I do in my portfolio right now, guys.
Mm.
And I haven't owned my home for 20 years.
That's crazy.
No.
So it's not for the right now, it's for the 5 years, the 10 years.
Yeah, and it's okay if you break even. I
Yeah.
mean, 2019, I was breaking even, and then by my third lease agreement, I was making $600 more.
Yeah.
And it just takes time. You just have to see just Gotta let it appreciate.
$600 more, and it's like your house is probably literally doubled
Doubled
in
in
value.
value. If I sold, I'd be kicking my butt.
Yeah.
I would be.
And I think that's the thing that is hard in today's world, is like you have to have patience.
Mhm.
And it's like, it is scary in 2019 if you're just breaking even. But if you're patient enough to say, you know what, I'm going to be okay with breaking even, because statistics show how real estate has appreciated. And guys, we are sitting in DFW in Texas. You might be sitting in Ohio, we are self-aware that the market here in DFW, I mean, I feel like everybody is relocating here, which we love. If you're a loan officer and you've got clients relocating to Texas, we help all of them. But we're in a great market for it as well. And that's why I will just echo, a real estate agent is going to be your quarterback, in no pun intended, in this whole situation. So I do want to share with you guys, and then feel free, ask questions. I'm going to look at the chat box in just a second, but I do want to explain. So I'm going to come closer.
Let's take a
Let's look at this
Okay.
beauty. I hope y'all can see this okay, but this is, oh my God, I can barely see it. But here's your house. Here's a spigot. Think of this as like a little water spigot. And the purpose of me showing you this is, when you get a home equity line of credit, let's say you have $100,000 of equity in your home, you applying for that home equity line of credit just turns on the spigot. Now, it doesn't mean that you actually are using the money. You're just getting access to the money so that if you need it, you can use it. And this is advice that I give to people, like if you're in your retirement year. So if you're listening and you're tuning in and you have parents that are close to retirement, I recommend people get home equity line of credits before they retire. You just want access to those funds just in case, because I think that's my one beef with real estate. I love real estate and I invest in all kinds of things, but real estate has been the most profitable. But that's my beef, is if I want access to the money, you have to do it in the form of either selling the house or taking out a home equity line of credit. So were you going to add anything to that? Karen?
So something else too, that what we will analyze for you is, yes, a cash out refinance is also an option. And that could be, now, more than likely, if you're sitting at that 2 or 3% interest rate, you are going to have a higher home equity interest rate. So what we'll do is we'll blend the two to see, okay, what's the difference here? Does it make more sense to keep that 2-3% and then bring on this HELOC, home equity line of credit interest rate, which is going to be higher? Or does it make sense to do a cash out refinance?
Mhm.
Right now, what we have seen is that it is making more sense to do the two. But what our team can do is we can analyze that for you, just to be able to say, what are we looking at? Let's be sure we're looking at all options. So we are saving you the most money each month.
Yeah. And I'll just say, hopefully we answered, and I'm going to pull up the chat questions in just a second, I promise. So if you've got questions and we haven't answered them, please put them in the Q&A or the chat. I'll start reading them off to the team, but I can't stress this enough that number one, a real estate agent is going to help navigate through how much you could rent your house for. Is your home in an area where it would make sense? But two, there are a lot of loan officers that you can work with. And I just want the people listening to know that loan officers, by definition, they take a 20-hour test or 20-hour course, take a test. And by definition, your job's to make sure that the client meets Fannie and Freddie guidelines. There isn't anything that has any type of financial strategy that's required with the job. And that's what I feel like really separates us from others, is not only do we know the strategy, but we do the strategy ourselves. And it's just like anything. It's like, Kara, when you put those numbers together and you're trying to figure out if it makes sense, when you do it for yourself, you know that strategy inside and out, that it's like, okay, I know that you know what you're doing because you've done this, not even just once, but you've done it multiple times. And so if you are talking to a loan officer, or I'd say even a real estate agent, one of the interviewing questions needs to be like, I don't just want to make sure I meet guidelines, but I need to know if this financially makes sense for me,
Yeah.
Would you agree? It's because it's complicated. Yeah. All right. I'm going to pull up the chat box. I'm going to scoot over more so I can read it. I'm going to stop sharing the screen, but this is everybody here. Make sure you guys give us a follow on social media. If you want to be invited to our next webinars, then make sure you reach out to the person who invited you. Like I said, we're going to talk next month about self-employed and how to buy your next house. So I'm going to go ahead and stop sharing. And then I'm going to read some of these questions. So you guys keep them coming. So one of them, guys, says, I keep hearing out there that there are pros and cons to having your rental. Oh, this is a good one. In an LLC. Do any of you guys have your homes in an LLC? I'm going to move this over to you. So Kara, do you have yours in an LLC?
I do not, but I am in the process of doing that because I feel like it gives you this blanket of protection. If something were to happen, if somebody were to walk on your property and get hurt, whether they live there or not, it just gives you that extra layer, that safety net, in my opinion, because to me, owning multiple real estate, pieces of real estate isn't just, oh, I'm gonna go buy this house and I have a rental. You have a business. I mean, you can run it as a business. The tax write-offs, there's so many benefits, and it protects you as a individual person, in my opinion.
Okay.
Yeah.
We've got another person asking if I was to buy a lake house that is partially rented out via Airbnb and partially they're going to stay at, is that considered a second home or investment home?
It's a great question.
I think as long as they stay there, because I just did this, we were buying a condo in Florida. We were gonna do a VRBO it out, but one of the questions that they asked me is, are you gonna live there? Are you gonna go at least 15 days of that year?
Yeah.
So yes, I think it would be a second home, which is, better products, but when
And
you go
there's no like, and I don't say this to be
Yeah.
shady, but there's no like mortgage police to say, well, how many times did you stay at the house? Again, that's not to say to be anything other, but that's when a lender asks you, do you plan to stay at the place? Do you
to go.
and if the answer is yes, we will typically write it as a second home. If the answer is no, then they would be an investment home. And Sharon, you just mentioned what your CPA is saying. Keep in mind, we're speaking from mortgage underwriting standpoint. So how CPAs deem a second home or investment property is going to be different than how a lender might. And that's what's confusing is we do the similar things, but we might classify them as different. So
Well, I recently also was helping a client, and after COVID, I think a lot of businesses and a lot of us went to the work from home. And that opened up more opportunity. I have a client who her husband travels quite a bit for work, but family and everything is here in Texas. And he was basically living out of a hotel for long extended periods of time. So they bought a home in Florida. She gets to work from home. So she goes, that's her second home. She goes, is with her husband when she can, works from home. And then when he travels East Coast or something like that, they set it up on VRBO so that it's furnished. And I mean, it's
Multi-income.
worked out amazing for them because they're not having to pay the overhead of hotels and things like that. And then she's like, oh, I get to see my husband now so I think with COVID and with bringing in a lot of companies working from home, that also has changed the dynamic of that second home because it's allowed us as Americans to have a little bit more flexibility.
yeah.
Mhm.
And just to go into detail about two questions and we'll go into the next one, but yes, all of my rental properties are in an LLC. I actually have a series LLC, which is something that a real estate attorney helped me with. I'll be happy to share his contact information. He's here locally in Plano. But what a series LLC is it allows like each home to be its own LLC. And it does offer you a little bit more protection. If this is your first rental, I mean, my first two rentals, I never had an LLC. But you can easily, when you bought your current home, your deed is probably in your individual name. You can do a deed transfer into an LLC, sign your lease agreement in an LLC. But again, a real estate attorney probably needs to help you with that. And I'd be happy to share his contact information. And then another question came in about, do you have to supply 2 years tax returns if you're buying another home? And so if you're buying another primary home, it's going to follow Fannie and Freddie guidelines that most of our files don't even need tax returns anymore. Kind of crazy. I know the only time that tax returns are needed are, and you guys correct me if I'm wrong, but if you're self-employed or if you have other rental real estate, basically anything where the government wants to get most of their money. So if you have gross sales, you own a business or you're making rental income, but you can actually deduct some items. what they're wanting to look at is what that net income is that you're claiming for that. But if you're a W-2 employee and you're buying another primary home, we don't need tax returns.
Nope.
Pretty cool. So typically we just need 2 W-2s and a pay stub. Heck, we've been writing loans just on offer letters. Maybe that'll be our third
Oh, yeah.
webinar, is like employment types. And now the big banks, I think they almost always ask for tax returns. They have an
that's-
overlay. Mhm.
Yeah.
Yeah, and so for people who have like a Mary Kay side business, that can really impact you, but we just opened up a whole
Yeah,
nother
yeah.
can of worms.
That's
There's
good.
other banks will add overlays, which are additional rules to the guidelines when you're working with, I feel like we were the Blanchirage, but Kara, you dyed your hair.
I know.
Now you're brown. I'm like, when I was putting this together, I was like, oh my God, we're all blonde. We look like the blonde. This is just proof that blondes can be smart and but she's
Nerdy.
brunette.
Nerdy.
Stay tuned. Next seminar, she might be back blonde, but no, you don't always have to provide 2-year tax returns. That's actually never been required. Even if you're buying it as an investment home or a second home, you don't have to. Yeah. Is it best to have the lease agreement in place before you go to the lender to get pre-approved for your next home purchase? It's a great question. Who's that from? Dana. Amy, what do you think? Do you need
Well,
it?
I'm gonna say, you're not necessarily going to have the lease in place.
Mhm.
Because you may be buying a home, let's just say that next property that you're purchasing is you're looking at 2 properties and they both are 350. Well, this property may, or the home you own now, I'm sorry, let me back up. The home you own now, you will get with a real estate agent to get an idea of how much can I rent this out for. But if you're shopping for your next primary home and it takes 6 months, well, the market could shift a little bit on what you can rent that property out for. But you at least have a general idea. Then yes, whenever you're qualifying, as far as just saying, hey, I can rent it out for this amount. We don't necessarily need the actual lease yet in place because you haven't moved out of it yet. So you don't know when to do those dates yet. But at least we have a general idea of what's the going rate for what you can rent this property out for. And that's something that your real estate agent will be able to help you with.
Another question is, are these examples or guidelines that we're talking about, is this just for Texas or is this nationwide?
Oh, nationwide.
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 Yep.
Mhm.
So
Doesn't
Nicole,
matter
you're
where
in
you're at.
California. It doesn't matter. Fannie and Freddie set the guidelines.
Mhm.
So these are what we're speaking to are the actual guidelines. And just so you guys know, Fannie and Freddie write the guidelines and the banks follow
Yeah.
them. Now, some banks will add additional guidelines or rules, but
Mhm.
you really want to work with a company that doesn't have any more rules because Lord knows there's
Don't need
enough
any more.
red tape. Yeah. This is a great question. So Oscar's asking, would it make sense to include my wife in a new primary home loan application while planning to rent our current home? Note that she currently has no income, but will be in the near future, and she has great credit. Does this hurt the application?
That's a great one.
I think I might want to answer that one.
Okay.
My husband and I, when we buy properties, we buy them in each of our names. We don't combine it
Same, sister.
Yeah,
because we
that's
want
it.
to diversify our
Mhm.
portfolio. So in a conventional loan, you don't have to pull their credit. Their debts don't go against you. So if she doesn't provide any income and we don't need her on there, her good credit's not gonna matter. It's gonna go off of your credit, whichever one has the lowest. So I would personally suggest doing it in your name. Because when she starts working and you want to grow your portfolio, then she can buy one in her name.
Mhm.
Because your debts aren't gonna be
Mhm.
working together.
And that, my friends, is a loan officer that thinks strategically and not just takes an application, because there are times where we get an application and both people are on there. And we're not order takers at this company. We all say, okay, I know you applied with your wife, but let me talk to you about this. And that's what's great when you're working with any of us is we don't expect you guys to know the strategy. That's our job,
Mhm.
right? So I agree with Kara. Maximize your debt to income ratio as much as possible.
I will say though, this is where it gets a little bit different in Texas, is that it is a community property state. So if you are buying another primary home
Yes.
and your
Good point.
spouse is not on there, they'll still be on the documents.
Yeah.
Because it is a community property state, so you don't have to worry about them not being on the title or the deed. still have to collect that information. They do
That's a
not
good
have
point.
to be on the loan. So that's really just a Texas one.
So they,
Mhm.
so even though, but
If
that's a
it's a
good,
primary.
yeah, if it's a primary, this isn't true for secondary investment, but sometimes the spouse can get salty.
Yeah.
Man
Yes.
or female,
Mhm.
they get salty, like I'm not on the loan, so if you leave me, I don't get the house. But at least in Texas, and I think Colorado's community property,
Yes.
California, we still own the home, even even if you don't, so you either own the debt or you own the asset, and that's kind of what she's speaking to with what's that called? Community property.
Community
Yeah.
property.
And
Yeah.
this is fairly new, so, on the comment, you didn't mention exactly, of course, like my credit's lower, but you said that your wife had good credit. So, Fannie Mae did change the rule when buying a primary, so that means you're buying a primary, you're gonna convert your current home to an investment. That you can blend the credit scores now. So if wife doesn't work, but wife has high credit and you're the income, but your credit is low, then it may be when we're working that Rubik's Cube for you, because this answer is kind of very wide, because Kara gave one and I'm giving another answer. And this is all part of that Rubik's Cube, in the sense that if your credit is lower, then hey, let's take a look at blending the two, because how much money are we able to then save?
The Rubik's Cube dream.
Yeah.
I wasn't lying when I told y'all I had that. No, very, very valid point. And we've got a lot of questions about home equity line of credits, which I want to get to next, but there's
Mhm.
one a little bit different question, and then we'll open Pandora's box about the line of credits. Do you need an executed lease agreement in order to use that income to qualify for another home? Does it have to be executed?
Yes.
And what else do we need along with the lease agreement?
Either the first month's rent or the deposit.
So, and the reason for that is in the 2007 days, you could just go to Office Max and print out a lease agreement and say Santa Claus is leasing the
Yeah,
house. And I know Kara's butt did
Yeah,
that. No, no. Yeah,
Yeah.
we're gonna do a live and
Yeah.
no. You could just get a lease agreement and put Santa Claus as renting your house, and that's what loan officers could use. Now, they want to fact check that, and their way of fact checking that is if Santa Claus is leasing the house out, they're gonna want your first month's deposit or rent, and they're looking to see if the name on the check matches
Mhm.
what's on the lease agreement. So can your brother rent out the house? What if your brother has a different? Okay, stay
No,
tuned
no
for
family
next.
members. It's hard to
Yeah.
get family members
It
out
is.
if they
It
don't
is.
pay that mortgage.
Okay.
So just don't even go down that
Okay.
road anyways, because it's
Save it.
not, save your relationship.
It wasn't my question, it was somebody else's question. No. Okay, so we've got some questions about, I promise I'm gonna get into the line of credit, but last thing, short-term rentals and Airbnb. I think most of you guys are asking, can you buy a investment property and turn it into an Airbnb? If I'm not reading that right, then just shoot that
Mhm.
comment right back at us. But can you buy an investment property and turn it into an Airbnb?
Absolutely.
Yeah. I would check with your communities if you're in a specific HOA, because they may not allow short-term rentals, they may not allow Airbnbs. My community just nixed the Airbnb, so
Those HOAs.
definitely check, because you don't want to buy a property and find out later that you cannot use an Airbnb, like they shut it off, you can't even list that house, they'll come after you.
Yeah.
So make sure before you find that home, you double check those guidelines, if it's a community or even the county. I think there's one in Miami, where you can't do Airbnb. Just found that out.
And your realtor will help you with that.
Yes,
too.
and your
Yeah.
realtor will help you.
So just for the record, you guys help with financing outside of just Texas?
Yes,
Yes.
Woo!
yeah, we did.
We are America's lender. No,
Oh, let's change it.
yeah,
I
let's
like it.
change it. Nationwide,
Nationwide.
nationwide, yeah. Shout out to Kyle Lindsay. He's on here. He said cash flow pays the bills, equity creates the wealth.
Yep.
Like it.
Oh, that's good, Kyle.
All right, so here's a question about the line of credits. Let's just dive into it. So we had someone ask, if you apply for a line of credit, and let's say they give you a $200,000 line of credit, what monthly payment has to be repaid? Because they were under the impression that you still had to make some sort of payment with a line of credit, even if you haven't used it.
No,
Nope,
there's no payment.
go into that for us.
If you don't, I don't like to use this analogy, but it's the best analogy I can use for you to understand it. It's like a credit card against your house. So if you don't use that credit card, it has a zero balance, you don't pay a payment on there. So, but if you use it, say you use that 5% down to buy that investment property, yes, then you'll have a payment. It is interest only. And then we do help with calculating, if you don't want it to be interest only, you can make higher payments on there to go towards your principal to pay that down. It kind of goes into what you're gonna be renting it out for, what your payment needs to be, or what you need to pay to help break even to where it's. There's a lot of it goes into, but yes, you don't have a payment unless you utilize the line of credit.
Mhm.
That's what's great right now.
Yeah.
If you take out a home equity loan, that's a different animal than a line of credit. Because like a credit card, you could have a $10,000 credit card. And if you don't ever borrow it, you're not paying it. But if you apply for a home equity loan, that's different. So just make sure when you're looking, and if you have additional questions about loan versus line of credit, we can definitely help you navigate that. But a loan has set terms, set amount of a repayment time. You have a principal and interest payment, whereas a line of credit, you can turn that spigot. Y'all, don't forget about my spigot. You can turn the spigot on and off as you need it, which is what's great. And you can pay it back. I mean, we've had clients use it for weddings, buying
Oh, yeah.
cars, because the interest is still tax deductible, depending on your tax bracket and stuff. So we had another guy ask, how much is the down payment if you were buying a second home, not converting this one into a primary, but you were buying it as an investment property versus a second home? Are there down payment differences?
Yes.
What are they?
10% on a second home. So second home, you're claiming that part of the year you are going to live in that property, and it's 10%.
Can you buy a second home that is 20 miles away and it's your second home?
The only way you could do that is it would have to be
I feel like
on the lake.
I ask her all the shady questions.
It would have to be,
Location.
it would have to be like hey, it's on the lake. My family goes there all the time. Like the story has to make sense, because why would you buy a home 20 minutes away? That doesn't,
As a second.
as a
As a
second.
second.
It smells like it's an investment
Yes.
property,
Yeah.
right? So
But I mean, if it's, hey, we're in the DFW market and we're buying in Pottsboro, which isn't too terribly far of a drive. But
where
that's
the hell is,
like, there's a lake there. It's a big
Oh,
lake
Pottsboro?
area. Yeah.
Where is
Like
that? Further than
Oklahoma,
me.
Oklahoma one.
whew,
So
Done.
there, it makes sense. Like my
Mhm.
family goes here all the time. We're
Mhm.
here every weekend. I have family members here. I'm on the lake. I've got jet skis and a boat and whatever it might be. Okay,
okay,
that makes sense. You're there every weekend.
yeah.
So yeah, now that's your second home.
But if it's not, it's 60, is it 60 miles?
Mhm.
60 miles.
Yeah.
You have to be in that, outside of that radius.
And Ronnie said Lake, shout out to Ronnie, Lake Texoma. Is that where Pottsboro
Pottsboro
area?
areas, yeah.
Okay, Ronnie,
Okay,
if
I know
you're,
where Lakes.
Geography-
I want to see Ronnie at a picture at Lake Texoma. That's just what I'm saying. 45 minutes from his house. Okay, well, you live in Oklahoma.
Is that
too.
Ronnie Lindsay?
Yeah, Ronnie Russell.
Oh, no,
Yeah.
okay.
Okay, so to this other question that I have, if I'm glad I came to this, we are wanting a bigger home and was wondering if that was possible. Yes, it is.
Mhm.
What about using this strategy to buy a third or fourth home? Is I think our last question.
Absolutely.
Well, it depends on what you're wanting to do, meaning am I buying, so I buy a primary, I convert. And now 2 years has passed, let's just say. Am I looking now to buy another primary and convert the home that I bought 2 years ago? Or am I looking to buy an investment property and stay in the home that I just bought 2 years ago? And either of those are fine. It's just how we're gonna structure the loan.
Mhm.
I've had a friend who actually has bought 4 properties. Now, that's a lot of moving, in my opinion. But he literally bought a home, lives in it for about a year or 2, and then moves and buys another home, and then he converts. So he's also
Yeah.
single, no children, no school districts. So it's completely up to your lifestyle as to what works.
And here's the thing, I think that is like the ultimate real estate hack.
Oh.
Like,
Smart.
I wish I would have, so that's what I did. If you guys go to my Instagram and you look at one of my most recent reels, I shared with you guys about a house that I bought 10 years ago. Single, by the way, you don't need a man to buy a house, for all the ladies out there, men, you either, okay, no shame. Bought it single, scared to death. What if a garbage disposal broke? Like, I didn't know it. This was before like thumbtack.com and all that, but there's no, yeah, now you can YouTube it. That's even,
TikTok.
I mean, could you fix the garbage disposal off YouTube?
Yes.
But you're the, no, you
Yeah,
don't
you-
count.
you-
Yeah, you
I
don't-
don't-
she
you
doesn't
don't
count.
count.
She doesn't count. But no,
Only
I actually personally did that where you buy a house as your primary, put as little money down, stay in it for a year, turn that into a rental, buy another one. And you can do it again.
Mhm.
Getting up to 4 is tough. I think we did that 3 times and then we bought, I call it my big girl home in Plano. And so from there, once you have your primary, if I wanted to buy another home, it would probably look like an investment property because it would be cheaper than the one I live in now.
Mhm.
So as you get older, it gets harder to get. So like anybody that's listening, if you were a first time home buyer when you bought your house, like this is the ultimate wealth building hack is
Yeah.
start young. If you have friends that haven't bought a home yet and they're like, I'm gonna wait until I make enough money to buy that dream home. Don't
No,
wait.
Start with the,
Buy
start
the
with the
piece of
small
crap.
one,
My
yeah.
first house, there was like 27 air fresheners. It was disgusting. It was so disgusting, but you can dress it up. So Harrison just told us that we couldn't be, told us, he said, you can't be America's lender if you don't know where Pottsboro is.
I do.
Okay, shots fired.
Okay.
Shots fired. Shots fired. Anyways, if you guys don't have any additional questions, I think we've answered them all. What is the timeline between buying a primary and turning it into a rental? Is it a year?
1 year.
1 year?
Mhm.
Realtors get a bigger tax break on investment properties with accelerated depreciation. Preach, that depreciation is real. Even if you're a W-2 and you're trying to offset some of your income, depreciation on real estate is major. And I mean, it's no surprise that some of the wealthiest people in the world made their money either off of real estate or they kept more of their money in their pocket because of that depreciation. So I think that's a wrap. Thank you guys. We appreciate your
you.
time. If you guys have additional questions, just reach out to us. You know how to get a hold of us. If you want to get on the invite list, then make sure you
Mhm.
email the person who invited you and say, I want to be on the invite. Next month, we're going to be talking about all things on how to buy a home if you're self-employed. If you have realtors, if you're on this and you have clients that you know are going to buy and they're self-employed, which means 1099, doesn't just mean like a brick and mortar type. We need to see their taxes before they file their tax returns. Like, holy
yes.
moly, we will reverse engineer it because you guys have to remember CPAs don't think like mortgage underwriters. And once those bad boys are filed, it's donezo, so we really appreciate you guys tuning in. If you guys have any additional questions, just reach out to us. We will record this and send this out to you.
Mhm.
You guys have a great rest of the day. And until next time, take care.
Bye.
Bye.